Hi friends, welcome to A to Z Learning channel. Yes, we are coming up with another video which is second in a set of 2 weeks where we'll be talking about the IPOs. Last week, as you know, we had 4 different companies coming up in the market and raising money through IPO, and they successfully achieved it. Most of the IPOs last week were significantly oversubscribed, and this week is no different. This week again, you will have the option to subscribe 4 different IPOs that are scheduled for subscription this week. Two of these 4 IPOs have opened up for subscription today, which is Monday, the 9th of August, and the remaining 2 IPOs will open for subscription from tomorrow, which is Tuesday, the 10th of August. So overall, you will have the option to choose any of these 4 companies that are hitting the market, primary market, IPO market this week. So in this video, we will help you understand what these companies do and what is our assessment on these IPOs. So it's an important video if you're thinking of investing in any of the IPOs that are scheduled for subscription this week, then you don't want to miss this video, because this video will help you in a very simple and easy to follow manner our overall assessment on each IPO using our proprietary assessment matrix, so that you can then make an informed choice to whether subscribe or avoid these IPOs. So without any further delay, let's start our video. So as I said, that we will be looking to share with you our assessment on these 4 companies and the IPO, the objective that they have come up to raise money in the market. The first company which opened for subscription today is called Car Trade Tech Limited Company. It's a mainline IPO, and overall they're looking to raise roughly about 3,000 crore through this IPO. So it's a sizable IPO. What do they do? It's a company which some of you may know if you have recently looked to compare new cars or you have bought any used car. They provide a very user-friendly platform, technology platform, to allow you to assess the car that you want to buy, whether it's a new car or used car. It's a company which was incorporated in 2000. As I said, it's a technology platform company which has got names such as Car Wale, Car Trade, Bike Wale, Car Trade Exchange. Those are the sort of kind of brands that they have built over the years. I think this online purchasing of car or bike or comparing different models and brands of the cars and bikes um, is a well-established concept in the developed world. In the US, UK, and Europe, most people do their basic research in terms of which car they want to buy through these platforms. In fact, these platforms are going to the next stage in the developed economy. So as a business, as a concept, I feel that car trade technology has got a very, very bright future. It will grow many multiples in the time to come. It has the potential to grow many multiples. And I think the customer choices, the convenience that they provide in terms of their technology platform to allow you to look at all the features of the car or bike, look at the comparison, look at the basic price, look at the various discounts that they can offer is really, really amazing. The bottom line for them is to have more tie-up, more commission arrangement with the car companies, and a very, very user-friendly, without any glitches sort of technology platform. And I think Car Trade, whatever little I've used, they've got a fantastic technology platform. So I'm sure it's just a matter of time that they will become very, very popular and may become the primary place where people go and do their research and also potentially buy their cars and bikes. So let's talk about the key facts of the IPO. As I said, IPO is open for subscription today. It will remain open till Wednesday, the 11th of August. The price band is 1585 to 1610. So it's a four-digit number for this. The one thing, the downside that I've picked up in this IPO is that the 3000 crore that they are thinking of raising through this IPO is going to be entirely used as a offer for sale. Means some of the existing investors are going to be cashing out their investment. And that makes me nervous with any company which is predominantly coming in the market to raise money so that existing investor can exit. I always find it kind of hard to believe that if you, as an investor, already think great about the company and you already an insider, you already have visibility on their business model and you've been invested with them for a while, why would you want to exit just because you want to kind of have retail other investor to come in and subscribe, take your share? Is a hard one for me to understand, my get head around. I can absolutely understand that from time to time company will do some offer for sale so that they can have broader retail participation. Through IPO they will be listed, which will be a very transparent way of valuing the company and all that. So I absolutely see the benefits of IPO, but raising entire amount of money and using it for investor to exit their share and nothing to be used for the future growth of the company is not standing, I guess, clear with me in terms of this IPO. So, and that's my kind of worry. When I look at the valuation of the pricing that they have done, the PE is around 200 times, which is not justifiable. It's a very expensive pricing, and the entire money is going to be used by the investor to exit. So none of this money will go towards the further expansion. So my overall assessment on this company, as you can see, is that the history of the company and the purpose is amber, though promoter background, market sentiment, and industry strength of the company are all green. But the IPO pricing, though gray market is placing some premium because it's an IPO, it's a company which is unique. So this will be the first company in this space which will be a listed company. So that may attract a lot of investors interest in this company. So therefore, overall, there may be an opportunity for a listing gain. So if your objective is listing gain, then maybe it's worth applying for car trade IPO. But otherwise, it's a very risky IPO for a retail investor. So I will consider this only for listing gain and nothing else. Now let's move to the second company, which again opened for subscription today, and it will remain open till 11th of August. The name of the company is Nuvoco Vistas Corporation. They are a cement manufacturer. They're part of the um, Nirma Group company. I think most of you know that Nirma washing powder is the very household brand. Everybody has got visibility. So they're part of that group. They are in the cement manufacturer. Their presence is largely in East India, though they are India level also the fifth largest player. They've had their price range is 560 to 570. They've got a combination of both fresh capital as well as offer for sale. Overall, they're looking to raise about 5,000 crore, where 1,500 crore is the fresh capital, which will be utilized to pay or prepay some of the borrowings that the company has. Um, and the balance 3,500 crore, which is a sizable sum, is offer for sale, which will allow opportunity for existing investor to bring down their holding. Promoter holding will go down as a result of this from 95% to 71%, but 71% itself is also quite significant, sizable, so I won't read anything negative there. When I looked at the red herring prospectus that they have filed for this IPO, I noticed that they have got number of legal cases. But then management response gives me the confidence that yes, they are dealing with those things and they'll be all kind of properly addressed within next 12 months or so. So again, nothing untoward there. So what's overall assessment? As I said, history of the company, purpose of the IPO is amber, because large part of the money that they're going to be raising is offer for sale, though there is a component for fresh capital which will be utilized to bring down the debts for the company, which will eventually improve their profitability. The background, promoter background is great. I mean, though they have got to where they are through series of acquisitions that they have done over the years. But promoter group of Nirma is a reliable, known kind of group, and they are here for long term. Market sentiment is positive. Industry strength is good because they are the largest player in terms of capacity in East India and fifth largest in India. And overall, I feel with government's focus on infrastructure in the next few years, cement companies are expected to be biggest beneficiary through that infrastructure drive that government has. So overall assessment is that when I look at the financial track record, it remains inconsistent, because though last pre-IPO year, the last financial year 20 was a profitable year, but the estimate for 21 as well as the 19 were loss making, so they are very inconsistent on that. An asking price has a PE ratio of 203 times, which is very, very expensive. But as I said, that cement is the sector where they may benefit from government's push for infrastructure. If they get the sort of growth that infrastructure projects are going to bring, then some of these PE concern may be irrelevant, because they may grow so fast that earnings may grow so fast that the price may be a justifiable outcome. So overall, I feel that it has got less of a potential to offer listing gain, but from a long-term perspective, those who fancy in cement stocks, it may be a good long-term investment for people to have some exposure in the cement stock. So that was all about Nuvoco Vista, which is a cement manufacturer and the fifth largest cement manufacturer in India. The third company that we are going to be talking about is Chemplast Sanmar. Chemplast. So Chemplast is basically a leading specialty chemical manufacturer in India. Again, chemical manufacturers are quite favorite of the market these days. They are going to be opening their IPO for subscription from tomorrow, which is 10th of August, and it will remain open till Thursday, the 12th of August. Overall, there is a 3,850 crore that they are planning to raise, where 1,300 crore is fresh capital, which is great, which will be utilized to um, basically for early redemption of non-convertible debentures that they issued. They'll be kind of redeeming those in full by utilizing this fresh capital. So they'll bring down their debt level. And then there is a 2,500 crore roughly for offer for sale as well. So again, large component offer for sale, which I personally don't like. This company has got an interesting history. They were listed company in the past, but they delisted themselves in June 2012, and now it's entering in the market with new avatar, um, and they're probably trying to take advantage of the positive momentum that's there for IPOs. Overall, it's a profitable company, and last year's profit, 21 profits are like really super profits, but they always give you kind of impression of doubt that they're probably taking the advantage of the timing. Overall, I think my overall assessment on this is that there's more amber than the green. So I would, my assessment is to completely avoid this, because there's hardly any chance for any listing gain. Even from a long-term perspective, it's very inconsistent. And this whole thing that they have done in the past, where one minute they are listed company, other minute they go out and go back, they change the face value of their share price from 10 to 1 to 5, all those sort of things. So it's kind of giving me more kind of, I guess, doubts than the confidence. Though chemical sector is people have got blind faith currently. They think anything to do with the word chemical is a huge success. But on this particular issue, I feel this is extremely risky IPO, and only risk taker investor may consider to apply. But otherwise, from a retail investor perspective, I think this should be completely avoided. This takes us to the last IPO, which will be hitting the market this week, is called Aptus Value Housing. As the name suggests, it's a retail-focused housing finance company. It primarily serves the low and middle income self-employed customers. Um, so roughly about people with about 50,000 income is what the kind of group that they look at. Less than 50,000 rupees monthly income people is what they look at. It's a South India based company. Um, the price band is 346 to 353. They are raising about 2,780 crore, where 500 crore is fresh capital, which will be to part finance for tier 1 capital requirement, though their capital ratio is very good. I mean, they're already capital adequacy ratio of 75%. So this will be extra 500 crore available to them. They're not leveraged much in that sense. But there is an offer for sale of 2,280 crore as well. Though the promoter holding is going to be quite significant. They're currently just under 75%. They will remain little over 72% even after the issue. So they remain committed for the future. I think overall, small housing finance company are important part of the financial inclusion drive that the government has. Um, but it remains far from kind of fulfilling their potential of penetrating Indian market. So for example, their loan book of whatever 88,000 crore is just not even 5% of the total housing loan market in India. Um, and most of their book of business has been built in 3 years. So the maturity of their book of business is yet to be tested. Most of their operations are like 7 to 8 years kind of loan, but I think I would say about 70% of that has been built um, only in last 3 years. So it's a relatively speaking newer company. So it's very difficult to kind of pass an assessment how they're doing. If I look at the NPA stats, non-performing assets that they had a couple of years ago only 0.4%. For financial year 21, it stands at 0.68%. So 0.868% is not significant if I compare with some of the other kind of companies like Avas uh, or Home First Finance. It doesn't look bad at all, but it's still gone up slightly. So I think that's natural because last 1.5 year pandemic impact and self-employed people that they target for their home loans are worst impacted as a result of pandemic. So overall, what's the assessment? I guess I would say that. Given the focus and under penetration of home loans in India, the companies that are focusing on the smaller ticket size and are operating in the remote and the semi-urban areas, rural areas, are going to be best placed to see the huge growth in the years to come. So overall, I feel and financial track record of the firm is really good. But some of these things need to be tested as I said that because bulk of their loan book was built only in the past 3 years. P/E ratio seems to kind of fully price, so there's no immediate, I guess, upside on the face of it that's available for the retail investor. But given the growth potential and what they have achieved in last 3 to 5 years and overall under penetration of the housing finance in India, I think it's a great investment opportunity from a long-term perspective. So I would say Aptus is worth considering from a long-term perspective. It may not give listing gain or may give very low listing gain, but from a long-term perspective, it feels an attractive company to invest in. So that kind of concludes our, I guess, assessment on the 4 IPOs that are available this week. So just to summarize, Car Trade is a great IPO from a listing gain perspective. Long term, I'm not pretty sure, but I guess it will be good for those who are looking to enter in this segment of the market. They'll be the only listed company in this segment. Nuvoco, a traditional cement business, again, I think great from a long-term perspective. Listing gain may not be there. Chemplast Sanmar is an avoid for us. I can't get my head around this, so I will definitely be avoiding it. And Aptus is looking good and reasonable valuation from a long-term perspective. So that's our assessment. I hope this kind of quick summary of the IPOs that are hitting the market this week has been helpful to you. We would look forward for your likes if you've liked the content of this. And if you have any comments on our, I guess, views on these IPO, then please do share those comments through the comments on this video. And thank you so much for watching our video. And if you've not subscribed our channel A to Z Learning as yet, please subscribe and become part of our viewers family. Thank you so much.